What if you had access to virtually unlimited funds? What if you could finance your real estate investments to 100% or more of your purchase price? What if? Hi, my name is Rob Lamotang. I created and teach the course Creative Financing, Buying Investment Real Estate Using Other People's Money. But a little bit about me to start. I became a real estate investor in 2010, and I'm currently a mentor and trainer in real estate investment. I taught creative financing and investment property courses for real estate education companies since 2016 and have been a coach and mentor since 2014. But before my real estate investment life, I was a self employed computer consultant since 1993. I volunteered as a scout leader for 15 years. I was a volunteer with the Ottawa Senators Foundation for 5 years, and I've been a regular blood donor since I was 17 years old. All of this is to tell you that there's nothing special about me. I am just an ordinary guy, and I'm about to tell you a different story. In 2008, I was 47 years old, leading a very typical life and 8 years away from that magical Freedom 55, the day that I was going to be able to walk away from my desk job and walk away into the sunset into my retirement. But for anyone my age, you'll remember what happened in 2008. Global stock markets began a crash that lasted many months. Between September 2008 and April 2009, global stock markets lost about 50% of their value. Being self employed, my pension was my savings. And I personally lost about 60% of my savings in that crash. And believe it or not, this was a managed portfolio. I was signed up with a wealth management company, and this was a retirement savings portfolio that was supposed to be bulletproof. Even gold, which should have been a hedge against stock market crashes, lost 30% of its value in that time. My dream of Freedom 55 had turned into Freedom 75 if I was lucky. I needed a new plan. I didn't know what to do. And it took me over a year to figure out what I was going to do. In the end, what I did is I went back to school and learned how to invest in investment real estate. I heard an infomercial on the radio one day and it said, "Come learn how to buy real estate with other people's money." And I can tell you now, the rest is history. Since 2010, everything that I have done has been 100% financed, all using creative financing techniques that we discuss in this course. We use conventional mortgages, we use vendor takebacks, we use private loans, we use secured and unsecured lines of credit, we use credit cards, wholesale fees, joint ventures, RSPs, and cash out refinancing. So, what exactly is creative financing? Well, to understand creative financing, you have to understand conventional financing. Conventional financing is going to the bank or mortgage broker, applying for a mortgage of 80% of the purchase price and having 20% down payment, or paying an insurance company a fee so that the bank will lend you money so that you only have to pay 5% or 10% down payment. Creative financing is stretching the thinking. It's thinking outside the box. Creative financing has a goal to solve a seller's problem in a way that makes you both whole. Understand, we are not buyers, we are not real estate inventors, we are problem solvers. The solution may involve conventional financing, but invariably, it also involves using other people's money or OPM, often to 100% financing of the purchase price, and often even more. Now, I'll come clean right from the start. I followed a program based on the Rich Dad philosophy, and I unapologetically subscribe to it. I only buy positive cash flowing properties. And I say this telling you that it's possible to commit no errors and still lose. That's not a weakness, that's life. There are enough things that can go wrong in real estate investment that if you plan on buying properties that do not cash flow, there is huge risk that you will not make it. And the key is always learning how to use other people's money. And to do this, we need to start thinking like an investor. We need to think talking like an investor. And we need to start asking the right questions. First and foremost, we have to understand the numbers and the lingo. We have to be able to talk to other investors in the language that they understand and the terminology that they understand. We have to be able to talk to real estate agents in the same language. And we have to understand what investors want from us. If we are going to be involved using other people's money, the people who are going to provide that money want to know how much we need. They want to know how long we need the money for. They want to know what their expected return on investment is. They want to know details on the investment, including primary exit strategies and alternate exit strategies. They want to know the risks and rewards, and they want to know about you and the others who were involved in the deal. But the flip side is also true. In order to be a good fit, the investor has to be a good fit for you. You need to know how much money they have available. You need to know how long the investor needs before he needs it back. It's no use putting together a 3-year investment if the investor needs the money back in a year. You need to know if the assets are liquid. It's no good to have a multi-million dollar investor and all of his money is already invested in property. He doesn't have the liquid cash. You need to know and understand their experience dealing with private investments. What have they done before? How have they dealt with it? How did it turn out? You need to understand their expected return on investment, and you need to understand how they expect to be involved in the investment. Some investors want a completely passive investment, hands off, and others want to be involved in the nitty gritty and the decision making. And the key here is getting them to talk about themselves. Finally, you need to learn to ask the right question. Most people ask for permission. Most people say, "Can I?" The key to problem solving is to ask the right question. Not "can I," but "how can I?" How can I solve this problem? How can I make this happen? Because in most cases, anything agreed to freely between consenting adults is legal, unless it is specifically and explicitly illegal. You also have to learn to lose the shyness. If you don't ask, the answer is always no. You shall ask always, because that is the answers to that are going to lead you to be able to put together the solutions. Now, I'll be honest with you, I hear it all the time, and you will hear it too. You can't do that. That's illegal. That's mortgage fraud. Because people don't know what they don't know. When you take this course, my goal is to take you down the rabbit hole, take you to a place that you've never been, and talk to you about things that you can do that you never knew you could do. It's a world that once you know, you can never go back to. Again, as a general rule, anything agreed to freely between consenting adults is legal unless it is specifically and explicitly illegal. So, again, the top things we're going to talk about in this course is how to finance your purchases to 100%. We'll be talking about conventional mortgages, vendor takebacks, private loans, secured and unsecured lines of credit cards, wholesale fees, joint ventures, RSPs, cash out refinancing. All of these things are tools to get to your goal. So during this course, we're going to discuss creative financing. We're going to spend a lot of time talking about financials, understanding financial statements, how to interpret financial statements. We're going to be talking about other people's money. What is other people's money and how do you use it? We're going to talk a lot about talking to other people, talking to investors, and having them talk to us. We're going to talk about how to use credit cards to their maximum efficiency. Most people think that credit cards are a form of credit that you don't want to use, especially for real estate. Well, you can use credit cards in many different ways to advance your real estate investments. Unsecured private loans using promissory notes, vendor take back mortgages, joint ventures, unsecured lines of credit, home equity line of credit, and the Smith maneuver. We're going to talk about agreements for sale, lease option for acquisition. We're talking about mortgages from self directed funds or private lending, post dated mortgages, purchase credits, cash out refinancing, which are equity pulls, split offers, blanket mortgages, syndicated mortgages. And then we're also going to look at a couple of things that you can do in the US that you can't do in Canada, things like wraparound mortgages and the 1031 exchange. By the end of the course, the student is going to have an understanding of different ways to structure financing in an investment property using little or none of their own money. And like I said, I can tell you it's doable because that's all I have done since 2010. The student will have an understanding of key performance indicators. They're going to be able to look at a property and analyze the fundamentals of whether this property will perform for them or is likely to perform for them. They're going to have an understanding of what investors need to know and a framework for presenting themselves to investors. They're going to have an understanding of joint venture agreements and what needs to be included in these agreements. A joint venture is like a marriage, it's a contract, it's a relationship. And just like a marriage, you need to have an understanding of what the rules are. Well, for joint ventures, that's called the agreement, and it's a critically important document. The student is going to need to know what they need to know about their partners in order to create win-win real estate transactions. When you solve a problem, a seller's problem, you find that they are more than willing to actually work with you because in the end, as long as their needs are met, they're happy. And you're going to learn how to present real estate transactions to potential partners. This course is given generally over a 2-day weekend, or it's given on 5 to 6 weeknights, a couple of hours, 2 to 3 hours, starting at 7 o'clock. So, what would you do if you had access to virtually unlimited funds? What would you do if you could finance your real investments to 100% or more to the purchase price? It's time to ask yourself, how can I?